Look what you do to me. I'm actually at your whim. All of my defenses down. The camera looking through me with its X-ray vision and all systems underground. All I can manage to push from my lips is a scream of absurdity. Every word I intended to speak winds up locked in the circuitry. Welcome, everyone. This is Adrienne Tograi. Just to do a sound check, if you can hear me, just give me a yay. Okay, good. Thank you, Paul, Marjorie, Dale, Bobby. So good, wonderful. We have a special treat for you today. Melissa Armo. She's the founder of the Stock Swoosh. She's a self-taught day trader with 6 years of experience. Melissa's specialty is trading strategy that focuses on shorting stocks that gap. So, welcome, Melissa.
Testing 1, 2, 3. Can everyone hear me? Thank you so much, Adrienne. Welcome, everyone. Let me know if you can see the slide as well. Can everybody see the blue, white and green slide here? Wonderful. Thanks so much, Adrienne, for inviting me today to talk to your class. It's always good to speak to new traders. It's exciting. And thanks for taking the time this afternoon to sit down and spend a little time with me. Today we're going to talk about earning big profits trading the first half hour of the day. And basically this is during the open, when the stock market opens. I'm talking about the U.S. stock market. It opens at 9:30 Eastern Time. And we're going to talk today about trading that time between 9:30 and 10 a.m. Eastern Time. So my name is Melissa Armo and I own a company called the Stock Swoosh LLC. If you'd like more information about me, you can go to my website, www.thestockswoosh.com. Or feel free also to email me at melissa@thestockswoosh.com as well after today's webinar. So one of the things I think it's interesting whenever I talk to new traders, and obviously there's some new faces here for me today, I always ask people, why are you doing this? Why do you want to trade? What are you doing this for? I think it's really important to know exactly what your goals are. For me, trading is a career choice. And I think actually a lot of the people that I come in contact with, they feel the same way too, that trading is a career choice. It's something that they really want to do full-time, maybe not full-time hours, but full-time meaning they don't have to do another job. They don't have to have another full-time job, a part-time job, anything else but trading. They just want to trade and work from home. So we're going to talk today about trading as a career choice because the strategy that I trade is something that you could do as a career choice. Trading is also a lifestyle choice. What do I mean by that? Really getting out of the rat race of the corporate world, of corporate America or corporate wherever you happen to live, even if you're in a different country. Sometimes you're working for years and years in one industry. And if you have been, you know what I'm talking about. I worked in the banking industry for almost 20 years. And it's a very corporate environment. So when you work for yourself and you work from home, it's a lot more relaxed. And it's actually a lot more self-empowering for you as an individual. So that is a lifestyle choice because you're saying, you know what, I don't want to be a part of this corporate world anymore. I don't want to be a part of this rat race anymore. I want to make my own choices, get up in the morning when I want to, quit working when I want to, go on vacation when I want to, have weekends off when I want to. And if you choose to trade, you will be able to make these choices if you can become successful. So the key is, how do you become successful? And what do you need to do to trade? Well, one of the key ingredients to trade is to have a strategy that gives you an edge. This is one of the very, very key ingredients to becoming successful. I'm seeing here, Diane doesn't have any audio, Adrienne. Can everybody else hear me? Am I coming through okay? Okay, good. All right, looks like Diane is good to go. Wonderful. So what I was saying was that you need an edge to becoming successful as a trader. This is really what you want to do for a lifestyle choice, for a career choice. You need a strategy with an edge, okay? An edge is what? It's something that would make you stand out from a crowd, just like this guy here, okay? We have a lot of negative Nellies back here. These are people that are losing, that are trading the market, that are losing. And then we have this guy here. This is you, the new you, the optimal you, the fabulous you. You have a strategy with an edge, and you're making money trading when a lot of other people are losing, okay? And this is what you need. Now, One of the things Adrienne does is she helps people with their mental empowerment, trying to get them on the right track with their mind and the things they need to do. You can do all of that in the world, but if you don't have a strategy that actually works in the market, you're not going to be successful. You need to incorporate a strategy with the mind work. It's togetherness. It's like everything working together. You got to have your head on right, and you have to have a strategy that actually works, on a base level, okay? Something you can do in the market to make money in. So one of the things I do is I trade gaps. This is a strategy I trade. Now, to me, trading gaps gives me an edge, and it will give you an edge if you learn how to trade them. And we're going to talk about this today. And again, its focus is on the open, the time of the day in the open. Here's a clipping of a chart. This has actually had quite a lot of opportunity in it. The stock ticker is called GTAT, G-T-A-T. It gapped. This was last week. Had a beautiful move here, okay? High of the day was up here around 18 something. Low of the day was around 16.50. This is a nice move for a stock in this price range, around an $18 price range. The stock actually could have been played for a swing trade, and you could still be in it. The stock has rolled on over here and continued since the day of the gap. This was back on the 7th, okay? The stock has had not only the day trade move, which you could have shorted and traded into the open for a quick trade, you could have also taken it for a long-term trade as well. This is another nice option too. Again, if you want to do trading for a career and you want to learn how to trade successfully, you need a strategy that is something you could do even in all time frames. You still are taking the trade though, guess what? Into the open or the position. So what are golden gaps? I'm talking about this for those of you that don't know what a gap is, or I'm going to talk about them now. They're really professional gaps. They're qualified professional gaps. What is a professional gap? A professional gap is a gap that moves in the direction of the gap. It is called a professional gap because professional traders and investors are making and creating the gap. In other words, these are not just regular people. These are big money people, hedge funds, institutions, professionals. And they are creating the gap in the stock. So if a stock gaps down, for example, you're looking at it to qualify it to short. And if a stock gaps up, you're looking to qualify it to buy it. In the case of a bullish gap, professionals are buying the stock. They're lifting it. They're giving it the momentum. They're buying it for whatever reason. It could be many, many, many reasons. It doesn't matter. They're buying it. Therefore, the stock moves higher on the trading day. In the case of a bearish gap, professionals are selling and or shorting the stock. You have both coming in, but it's usually aggressive selling action that comes in to make the gap. Therefore, the stock moves lower on the trading day. This is really why I prefer bearish gaps. I like to short more than anything else in the world, because gaps that gap down have two things happening in them to create the gap: the shorting and the selling. Therefore, they have double the potential for a move. And getting back to this guy here, I have an edge in what I do personally because I only do the downside. And every once in a while I'll go long, and I certainly know how to look at quality bullish gaps, but this is me like shorting in a sea of people that like to go long, even in this market, okay, which happens to be very bullish, by the way. So that even can give you an edge. Focus, 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 focus on one thing, and even in one direction helps you become successful. Now, let's look at this one here. Another great example. We looked at the GTAT. This is RVBD. This just happened this week, by the way. Monday morning, stock came out. Look at how it gapped down. This is an example of a professional gap. The stock closed on Friday around $20.30. Opened the next morning here on Monday around $19.25. So the stock gapped down $1.20 from Friday's close at 4 o'clock Eastern time until the morning. This happened actually early in the morning before the market opened, and then opened here at this price. It gapped down $1.20 something and had a nice move of the day. Came down here to 1860 something and then followed through. So again, you see this, all of this nice momentum here, and this is how you're getting paid as a trader if you're in the right direction, which is short. If you're in the wrong direction, you will lose, okay? And how do you always know what direction to play it? Because I'm qualifying them. I have a way to qualify these picks. The point I'm trying to make is that really one strategy is all you need to be successful and make money in the market. And so for me, it's gaps. And if you want to be successful trading, I think you have to focus on one strategy. Now, I'm not saying you don't have to do other strategies if you want to, but you can't be a jack of all trades and make good money in the market. You have to be really, really, really good at one thing. Then you get that down, become an expert in one strategy, then you can do other ones, okay? But if you don't even are making money doing one thing, if you're not making money doing even one strategy, why would you think you could do several? Okay? It's about focus, quality. We have another person with no sound, Adrian. Can everybody still hear me? Mo has no sound. Gaps are a powerful strategy that offers the opportunity to make money on a consistent basis once you learn how. And traders can book profits with substantial gains in a timely fashion early in the morning in gap trades. And this is what I really love the most about gaps. Besides the momentum is the open. Gaps also set up every day in the market. And right now is a very, very busy time actually for gap trading. It's third quarter earnings season right now in July and August. It'll run through into Labor Day. And a lot of people take the summer off that are traders. They say, well, there's nothing to do. There's no volume. That's not true in what the strategy that I trade. There again, it goes back to a career choice, a lifestyle choice. If you want to do something, you have to have a strategy you could trade pretty much all year. And gaps set up every day in the market. All you need to do is find a way to pick the good ones with a high odds of working as a day trade. That's the goal. Now, I was talking about qualification. What do I mean by qualifying? I mean using my system, which is called a rating system. It's a qualification system. That's basically what it is. I have a 26-point rating system. The 26-point rating system is a way to pick the good ones. Every day there are hundreds and thousands of stocks to trade in the market. And this is true. How do you know what to look at? How do you know what to watch? How do you know what will move? How do you know what to trade? How do you know what will work? How do you know what won't work? It can be a big fat headache if you don't have a way to qualify them down, to, again, focus, like you're pointing it into, getting it, honing it right in there to see the one, to pick the good one, because you only need one. You really only need one good trade a day. One good trade a day, you could do it. Monday, Tuesday, Wednesday, Thursday, Friday, one good trade. It takes extreme focus and detail to trade successfully and accurately on a daily basis. The 26 Golden Gap rating system pinpoints directional bias accurately to help you know what to trade and what stock to pick. And again, because there's so many things to look at every day, you need a way to hone it down. Focus is extremely important in trading. And actually, this is something that Adriana mentioned yesterday. All the successful traders that she's mentored have a focus. It'll be very hard and challenging for you to make it without a focus. Why? Because the market is enticing. It's exciting. The thought of making a lot of money is exciting. And if you're passionate about the market, you get up every day and you could be all over the place with what to do. Longs and shorts and all kinds of different strategies. And you'll turn on the TV and the news and watch the internet and go to a trading room and you'll be jumping from thing to thing to thing. And in the end, you'll rack up a lot of commissions, but will you rack up a lot of gains? Probably not. It takes an extreme amount of focus to be good in this. And again, to be an expert. So let's talk about trading the open. Trading the open gives you an edge. Why? What is the main reason this happens? Well, there's a bunch of different reasons, actually, okay? One of the main reasons that trading the open gives you an edge is that not a lot of people know how to do it. I mean, that's just like a fact, okay? Going back to the blue people and the yellow guy or girl and the picture before, there's not a lot of people that can trade this time of the day. In fact, I was talking to somebody, this was a couple months ago, somebody that I've known for a long time, somebody that actually does trade the open, like, you know, not the same way I do, but he does know how to read it. And we were talking about it, and we both agreed, we're like, gosh, you know, people don't know how to do this. Hardly anybody knows how to do this, even still. And I think it's one of these things that it will always be this way. So it's not like if you learn how to trade this time of the day, it's only going to work for like 6 months or a year. This is a time of the day that most people, and I don't know why, because I find this time of the day easy to trade, but most people find this time of the day volatile, scary, hard to understand, hard to read, too excitable, too much momentum, too much volume, and they don't know what to do with it. They're unsure. There's a level of uncertainty with people. So it will always be the fact that people stay away from this time of the day. So right there it tells you that if you can learn how to figure it out and how to trade it, you're going to have an edge, because most traders aren't. But I'm talking about regular traders. I'm not talking about professionals. And what do you want to be? You want to be with the professionals. You want to be like a professional. You want to be a professional. And this doesn't mean that you have to have millions of dollars and run a trading desk or a hedge fund. You want to mimic people that are real, true professionals, that are in that time of the day, that aren't scared of that time of the day, that are taking their positions in and out in that time of the day. And if you're with them and taking the positions in there with them, you're going to make money. And not only that, you're going to be at the top of your game. You're going to be at the top of the class, at the top of the rank, because a lot of regular people don't know how to read it and shy away from it, and they always, always, always will. So trading the open gives you an edge because not a lot of people know how to do it and will never know how to do it accurately. Now, that's number one. Number two, what is the other reason why it's a good idea to learn this time of the day? The other reason it's a good idea to how to learn this time of the day is because it is when institutions actually do something, whatever it is. It could be selling, it could be shorting, it could be going long. Now, like I was saying here, most traders don't know how to read this time of the day, but it pays you fast. Here's a stock. This was a setup just the other day on the 10th of July. Rallied up, rally, 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 rally. Set up here is a nice short. Boop, boop, boop. And you see how the stock came on down. You could have been out of the whole thing here by 10 o'clock. You could have held it a little bit longer to 10:15. Setup was right in here around 9:40, but you could have been out of this really literally in 20, 30 minutes. So this is a very nice momentum move that happens into the open. Here's the open. Here's where the stock is opening here at 9:30, rallies up. Here's the opening of the stock. And if you don't know how to trade this, you might have bought the stock, but it was not a buy, it was a short. It's actually still a good short. This is LL. Anyways, going back to what I was saying, most traders don't know how to read this time of the day. They're unsure of what it is, and they shy away from it, and they may wait till here, after 10 o'clock, later. But then all of this has already happened. So then you've missed the mood, and you can't really get paid. So the key is to be with the professionals, and the professionals are in here. They're in here. They are opening these stocks. They are opening them, okay, with the volume, with the moves, with the momentum. Now let's talk about why this time of the day is fast. It's fast because of momentum. Momentum happens into the opening gaps. Why? Because professionals are making them and they have a lot of money. And what makes momentum? Money, share size, volume, the drive. Gaps are driven by pure power moves. And the advantage of learning how to trade the first half hour is that's when all the momentum happens. And momentum equals profit for you and me. Like for example, if you have 1,000 shares of something, it was $1, that's $1,000. You really only add an extra zero to something to make the money, but you need the move. And who is the one that's making the momentum in the open? Again, it's institutions, hedge funds, banks, etc. Why do they make momentum into the open? Well, here's the reason, okay, or several reasons. It might be pre-planned, it might be pre-arranged, it might be preset, predetermined. It could already be on the radar. It could also be based on current immediate panic. It could be any one of these things. It might be important and even imperative that that institution get in or out at that time of the day. So it could be lots and lots of things going back here to LL. What happened here? Well, maybe this was predetermined. They were preset and predetermined to sell this stock into the open. It was all figured out before 9:30. Or maybe something happened that created a panic activity that it was an immediate decision to do it. It varies. It varies depending on the reason for the gap, okay? That's the bottom line. Or who happens to be in and out of the position here. But the point is that it is happening at that time frame. Professional traders don't sit like drones at their desks from 9:30 to 4 o'clock every day. And the good thing about trading this time of the day as well is that you don't have to sit like a drone either. You could trade and you could be done very quickly. And the other good thing about this time of the day is that fast means instant gratification, meaning as soon as you take the trade, you're up. I mean, you could actually take a trade and be up in 5 minutes and be done for the day and go back to bed. That's how literally sometimes these stocks work. It may take you 20 minutes, it may take you 30 minutes, but it's a heck of a lot less time than you'd spend if you got up and had to go to a job and had to go and be part of the rat race for corporate America where you actually had to work at a job 8 hours a day. And you know what? These companies anymore expect more than that. You are expected to give more than 100% now. And if you don't give 100%, don't expect a raise. And if you don't give 100%, more than 100%, don't expect a bonus. And if you don't give more than 100%, you may be booted, okay? This is the world we live in. In corporate America today, it is highly competitive. There are people with secondary degrees, very high-level degrees now, that are doing jobs at that they could even be doing bigger jobs, but this is all they can get, okay? So it is a gift to be able to learn how to do this, a gift from the universe. If you can learn how to trade well and make this kind of money so quickly, because many people are working their butts off, their tails off. I mean, 50, 60 hours a week, and they're not getting paid for it, because this is the world of the situation of the economy that we live in right now. And that's why sometimes the work that's involved to learn how to trade, taking a class, going to a training class like Adrian's, or taking a class like mine is worth it. Because you got to think long term about some of these things, or where you want to do for your career. The career choice you may have thought was going to be yours. Now, maybe it's not the thing you thought. Maybe you thought this was going to be your career, whatever you're doing for the rest of your life. 20, 30 years, you thought, this is it. I'm going to be here at this company forever, retire. I know it. But then, all of a sudden, it doesn't happen. And now they're talking about doing away with pensions at these companies. Now they're talking that they're going to do away with pensions. Now people are not even going to get pensions. So they're with these companies for years. They're expecting to get a pension, and now companies want to drop pensions for people. The world is changing. It's about self-empowerment. You got to recognize what's happening right now today, and you got to take charge of your own life. Okay? Now, what do I mean by instant gratification? Let's go back to this. Well, everyone wants instant gratification, specifically with money. And what do I mean? Profit in the first trade of the day. There's nothing better than when I take a trade and I press the button and I'm in it and I'm up as soon as I take it. I love that. I love that about trading, what I do. I love that about gaps. I love that, okay? And you make the profit quickly. Most of the momentum that takes place in stocks happens in the first 30 minutes of the day. If you wait until 10 a.m. or later to take a position, you'll miss 75% of the move of the stock on the day, because the professional did what they had to do. They're done. They have directives. They said, well, this is what we're going to do. We're going to do this. We're going to buy this many millions of shares of this. And then once we do it, then we'll buy a little more into here later. But basically, they take it into the open, okay? And most people cannot figure out directional bias until after 10 a.m. Why? Because they want an intraday directional trend. They want to see a 1-minute chart trending up, or a 1-minute chart trending down, or a 5-minute chart trending up. Most people can't even figure it out, and they wait. They wait till after 10 o'clock, and they're missing the boat. They're missing the move. They're missing the momentum. They're missing the pay. And that is one reason why most traders lose, because they're taking it late. But I have a way to figure out directional bias before the open, and this is the rating system. The system I created called the Golden Gap 26-point rating system, to tell it before the market opens, before 9:30 Eastern time, okay? So the 26-point checklist, it tells you what to look for. You're going through the checklist in the pre-market. That's when you're doing it. You could even do it at night. You are totally prepared by the time the market opens with your risk, what stock you're trading, what you're doing, what the setup is you're looking for. You got everything figured out, and you just wait till it opens and you take it. Now, you don't know until it opens, okay? You have to wait still, but you know exactly what you're looking for. And then when you get it, you get it. And if you don't get it, then you don't do it. And it's as simple as that. Now, one of the other benefit of trading gaps is, look at this guy here. He's very happy. He's very happy with his career choice. He actually loves his life. Talk about a happy person. The benefit of trading gaps is that there's a small time commitment each day. A very small time commitment each day. All right? So you could set aside a half an hour you could get up, and you could trade for 30 minutes and be done. Or you could trade for 5 some days. Or you can hold for a little bit longer if you want to, but really, again, most of the move happens in the morning, so if you do hold something longer, you are staying in it to maybe get 20-25% more of the move, and you might be in that for 6 hours to wait. So, it's up to you. I think what happens is that the exciting thing about trading gaps is to be able to trade that period of the day and be done quickly. Muthu is asking a question. He's saying, what is the success rate? For the day, I'm going to talk about 2 time frames. One is day trading intraday, and one is longer term, Muthu, to answer the question. For day trading, I'd say my success rate is between 70-80% as far as the picks and the setups going to work. For long term, it's actually extremely high. And the funny thing is, I didn't make up the system to do anything but day trade. I personally am only day trading what I do. But I've been tracking my longer term moves and my gaps. It is very high. And that tells you right there, or it's told me even, which has helped my own conviction, that is the footprint of what the institution is doing in the stock. Because if you could play something for a long time frame and have it stick, that is an institution moving that stock in the direction. Every once in a while, though, on the day, they'll fail, okay? And that's why you have to assess your risk. If every pick worked 100%, you'd never have to consider your risk, but that's not reality, okay? And there's also two competing forces sometimes in stocks, and one may win out on the day, and guess what? Then the bigger time frame steps in, and then the next day the stock continues the direction it's supposed to, and then does for the longer term. It's an interesting thing I've found. A great example of that, actually, which I don't have the chart clipped in here, is BBBY. If you want to go look at that one. Can you use your checklist of strategy to trade the E-minis or other futures? You know what, William P? I have people ask me all the time, can you use it for Forex? Can you use it for this? Can you use it for that? Can you use it for options? I know that people are using it for options. In fact, people in the room ask me every day, what do you have 100% conviction in for tomorrow, Melissa? So people want to do an option in it, and this is even me predicting the gap, which I do often too. But the thing is that I'm not doing that. All I can tell you with 100% certainty is that I can day trade this successfully, and so could you. The options, I really don't know because I'm not doing them myself. People have told me they've done them successfully. No one has come to me with any other thing besides options and said I'm doing it and it works besides the options. The day trading I'm doing. I know people also that are doing overnight successfully with what I taught them. I'm not doing that either. So I can say, I know I'm doing it, day trading, and it works for that. I'm tracking the longer term swing and core trades. I see them working. I have people I taught that are doing that and options. They've told me so. So other than that, I can refer you to those clients to talk to them that are doing the other things, but I can't tell you exactly, only about the day trades. Mr. Trader is asking a good question here, and I don't want to get too off topic, but I will address that since Mr. Trader asked it. Mr. Trader is asking me about account statements to prove my profitability. I'm going to be very, very direct, and I hope I don't offend anyone by saying this. I don't feel the need to prove myself to anyone. And I'm not saying that to be nasty. I'm just saying that as a fact. You know, I've made it. I've gone through the ringer and I've made it through the other side. And if you want to come learn my system, you're going to learn something good. And if you don't, then you'll find your own path. You know, it was a tough road to make it. You know, yesterday Adrian was talking about all the stuff about, you know, the mental thing about money, everything. I went through it. I went through it and I went through it myself. And I have a higher intuitive self that led me in the right direction to do the right things. Because I didn't go to someone like Adrian actually when I was going through my process. And maybe if I had, I would have made it faster because it took me, you know, a couple of years to figure all this out. So for those of you that are thinking about her, she may help lift you up faster to where you need to be. I went through a tough road when I went through it myself. And when you do that, and you come out the other side and you're making good money in the market, you get to a point where you say, I don't need to prove myself to anyone. And I also don't really want anyone to know exactly how much money I make because I don't think it's anyone's business. So those are the two reasons. I feel that if you are in a place where you need to have the proof, then you have to consider whether or not this is the right thing for you to trade. Because what I found is that people that want proof from the market will never get enough. Like, if I did that, then someone will want something else. Then someone would want something else, and they want something else and want something else. At the end of the day, when you trade the market, there's no guarantees. And even if someone has a class and they say, I'm giving you a guarantee, how could they do that when they're not there pressing the button? You're in charge of your trading. You're in charge of the money you make. You're in charge of your own life and your own career choice and your own direction and your own trading, your own risk, and you're responsible for yourself. I believe that people that decide that they want to be self-empowered will go out there and do it and know that. They know that. They understand it. They get it. And maybe you will get that at some point. Maybe you're going through the process. Maybe you don't totally 100% get it now, but someday you will. Maybe someone like Adrian can help you get that and pull that together. I believe without a shadow of a doubt that I was meant to trade because when I got up every morning, when I was at the beginning and when I was losing, I got up every morning and I did it. I got up every morning. I never blamed the market. I got up every morning and I did it myself. And I got up every morning. I taught myself what I know and I lost and then I made it and then I lost and then I made money. I was back and forth until I got it. And I did it full on 100% risk with no guarantee, not knowing if I would ever make it. And every single person at one point in my life said to me at that time, and I'm really going off topic here, but this is a good question, said to me, Melissa, why are you doing this anymore? Why are you doing this anymore? They said, what is your end game? When are you going to stop? How much are you going to lose until you quit? That's what everyone was saying to me at one point. And you know what? I knew that I wasn't going to quit. And when I realized then that the answer was I was never going to quit, then you realize you're going to make it. Adrienne was talking yesterday about passion. People that are passionate about the market will find a way to make it. It might take you years. It might take you 5 years, 10 years, 20 years, 30 years, a year, a month. I don't know. But when you're passionate about the market, you will be led eventually to the people that will help you put it together and make it. The problem is that many people say they want to make it, but they don't really have that fire in their belly, that fire in their gut. I call it the eternal flame. It's the eternal flame that burns, that burns in me, that is me, that is one with the market. And when you recognize that you need to have that, and it needs to burn all day long, every day, from the time you start to the end, you will not have the expectation of needing people's statements or guarantees or anything like that. Because sometimes people give you those things, and you know what? They're false. And you got to be aware of that too. You got to be in discernment about the people that you're out there that you're learning from. And that's something else Adrienne talked about too. But I've really gone off topic here. Let me look and see here. Credibility, I'll have you refer you to clients who have been trading with me for the last 1.5 years, 2 years. I can't think of better credibility than that, because those people are risking their money with me every day. Was the BBY trade on 626 in the gap down? Yes, Bobby. And it was a short. It flipped that stock as rally. You know what? It's still a short. And I shorted on the day, made money on the short. The stock has flipped. People are trying to go long that now that are traders, but it is not a short. It is not a long. It is a short. It is an institutional short, that stock. And there are traders that are long that. I can see it. I can see people are long that stock now, and they're going to get creamed. There's a good example. But I did make money shorting that as a day trade. But it's a long-term short too. And there are traders that are in there long. They're going to get crushed. That stock's going to gap down again, 100% conviction. How do you decide when to go long on a trade? Same thing with I do on the, if I go long something, then I rate the gap for the bullish side. I rate the gap using the 26-point rating system. I just flip them to the bullish ones. Okay. All right, let's get back on track here. But that was a good discussion. Okay. So you got to have all these things going for you besides the strategy, which I'm talking to you about. You have to have the whole holistic picture, if you want to call it holistic. I don't know if that's a good term for this to talk about trading, but you really got to have all those things together to make it. All right, let's get back to this. Small time commitment each day. The shortest amount of time you can be in a trade, the less you're at risk. That's a good thing. So if you can make money being in a trade for only a short time period each day, isn't it better than trading all day to make the same amount of money? Yes, yes it is. Or sometimes, in fact, less. Why? Because the trade may go against you. And you may say, well, to give a little more room. Well, give a little more. Well, I'll give a little more room. And then all of a sudden you've given too much back. Less is more in reference to day trading. That's my thoughts on that, okay? Meaning the less trades I take, the more that I make. The less time I'm in it, the more that I make. It's about size and the momentum, not necessarily the time that you're in something to make the money. Size, you make more money with size, okay? And you make more money with the move, which doesn't have to mean that you're in something for a longer time. It's not about that. It's about trading the period of the time when the stuff has the move. So the benefit of trading gaps is a good risk reward as well. This is another thing. And how do you know this? How do you get the good risk reward? Where? From the setups, from the entries. Now, what do I mean by risk reward? And this is just a review here. And I'm sure a lot of people here know what this is, but I just like to hone it down. A ratio used by many investors to compare the expected returns of an investment to the amount of risk undertaken to capture these returns. This ratio is calculated mathematically by dividing the amount that he or she stands to lose if the price moves in the unexpected direction, okay, which is the risk, by the amount of profit the trader expects to have made when the position is closed, i.e. the reward when you close out of it. So what are you looking for as a good return? Okay, and this is what I'm looking for. What should you look for if you want to make money doing this, if this is your career? Are you looking to trade and get a good return on your investment? Think about this tonight, because this will help tell you a lot about your strategy, whatever it is you're doing now. First of all, you have to have a strategy, and if you have one, think, does this strategy have a good return? Like, is this really worth it? To me, what is a good return? Not risking one to make one, not risking a half to make one. Okay, so scalpers risk a lot to make a little, and that's the thing about scalping. It's like actually almost a lot of risk to scalp, because even though you're in the trade maybe quickly as a scalper, scalpers happen all the time during the day from 9:30 to 4, but you're risking like one to maybe make a quarter or a half. So to me, that's not a good risk to reward. Okay, now why isn't it good? It's still profit, it's still money. If you make 1 to 1, that's still money. If you still make a half 1 to 1, that's still cash, yes, but some trades will lose, as we talked about earlier. That's reality. And all trades will have commission costs. Boom, another reality. And there's nothing we can do about that. This is the cost of doing business. You have to trade stocks that move. A stock that moves and will have a 1 to 3 risk to reward gain as a potential, okay? A stock that moves to a bigger number will have more than a 3R gain, which can happen often. Momentum is one way to get good risk to reward trades. However, what else do you need to get good risk to reward trades? You need good setups. This is the other thing I find that traders struggle with. Not just what to pick, not just what to focus on, not just what direction to do something, but where to get the setup. Quality gaps give both momentum and good setups. What do I mean by setup? Where do you take it? Where do you take it? Where do you put the stop? Where do you get out? Traders need to know how to spot and take the trade setups while they're happening live. This is a skill. This is a skill you got to learn how to do. This is something that you can learn and you got to learn, and it is a skill. It's an absolute skill. Tom, does the system help identify upcoming gaps, or do you have another source to find gaps? No, I'm just saying me, Melissa, has gotten so good at gaps that sometimes I'm predicting a stock is going to gap in a certain direction before it does. I am not taking the position before then. I'm not teaching you to do that, but I will scan and look for stuff the day before, and I'll say, I like this. This is good. I think this is going to do this. In fact, right now, I didn't even look. eBay has earnings out tonight. I don't even know what it's doing. Somebody quick, look it up. Tell me what eBay's doing. eBay right now, no matter what it does, is good. That's weird. It's bizarre world. I'm just giving it to you right now. I tell you right now, I looked at that chart today. It's a weird chart, but I can tell you if eBay's gapping up tonight, it's a great long tomorrow. And if eBay's gapping down, it's a great short. This is strange. That's not always the case, but eBay is good no matter what it does tomorrow in the direction of the gap. And I'll just give that to you. I have no idea what it's doing. Somebody wants to look it up and tell me. It's up, buy it. eBay is a good long tomorrow. There you go. And I didn't even rate it, but it will rate good because I looked at that today. So I kind of look at stuff and I say, well, like today I did the MTG and I said, I know MTG is going to gap down. I said that yesterday. It did. It gapped down. But I didn't take the position until it did. On eBay, I looked at it and I said, you know what? Oof, no matter what this does, this is good. Now it's gapping up. You can go long eBay tomorrow. There you go. All right, let's get back. Knowing how to take trade setups is critical to getting a good risk-to-reward payout. What do I mean by the setup? I mean, where are you getting in? Where are you taking the trade? Where are you getting in? This was the GTAT, okay, from the other day. Here's the quick entry. Boom. Went down right to the first target. Talk about time of the day. You could have done this trade. You would have been done in less than 5 minutes. You could have actually done it again quickly here. Or you could have just done this and gone to the gym, okay? So you are got to get the right trade set up. That's what gives you the right risk to reward, knowing where to take it, where to get in, where to get out. So timing counts for getting paid in your return fast in the setup. Because if you get in too late, you're going to miss the move. If you get in too late, where do you put the stop? If you don't put the stop in the right place, you'll get dinged out and it'll go into work without you. You've got to get the trade set up right. Now, let's talk about momentum some more. Everybody's in love with the market. People think the market's extended. People think the market's going to come in. I didn't even see how the market closed today, actually. I didn't look at it before we talked here. But I know the market's higher. How do I know? Because I know how to read gaps. I know how to read bullish gaps and bearish gaps, as we're talking about. And I also, because I really know how to read bearish gaps, I know when something is really what is called a break, okay? When something is a break in a chart or when something's really a nothing gap. Because there are gaps that will not rate per my system. And then what will you do with them? Nothing. You won't do anything with them. You don't do a thing. Okay. Well, I didn't rate the eBay, but I'll look at it tonight. I'll do a video and plop it on YouTube for anybody who wants to go see it. But, you know, it's a long tomorrow. I'll rate it exactly, though. Momentum and power into the open. So here was the QQQs. See how the stock opened and pushed back and rallied up here? This is what I talk about momentum. When did this happen here? In the beginning part of the day. And the nice big push and rally. Andrew's talking about Head and Shoulders. I don't use any of that stuff. If you want me to be honest with you, I don't use any of that stuff at all. I don't use any of that stuff. I don't teach any of that stuff. I read price. It's pure price. My class, everything I would teach you, everything that I know, everything I taught myself, I'm reading the price. It's the numbers. It's all the numbers. I don't do anything with Head and Shoulders or jiggies. I don't do anything with any of the different stuff, to be honest with you. Like, if somebody came to me tomorrow and said, that's it, we're stripping you of everything. We're going back to the old day. If you want to trade and make money, you're going to have to go down to Wall Street. You're going to have to stand on the floor and read the tape, and you got to get in line. You know, I'd say 99% of the people that trade would be out of a job. They wouldn't be able to do it. They'd have no freaking clue. People rely on Fibonacci's and so many different things now to read stuff. They rely on this. They can't live without it. I could actually read the tape and trade and make decisions. I could, you know, I could do it. It's a combination, but it's really just price. I mean, I'm not saying I ignore volume. I don't ignore it. I don't ignore it because I think you got to be aware of it. But what typically happens is I'm usually seeing something before the volume-driven drive comes in. Okay. Yeah, let's look at this here. I have this guy right here. Bobby's talking about the Qs on this day. Here it was. And I know people were trying to short this that are traders. They wanted to short this, and I couldn't blame it against them because the stock did gap down. Let's go over it. This was the market. This was back last week. Market closed up here around 95 something, gap down. This is a gap down, it gapped down. It gapped down the day after, it gapped down. When I saw it, I said, whoa, this is tricky. And I knew people would be trying to short this for several reasons. One, because they want to short this market because they think it's extended. Two, because it's a gap down. It is a gap down. And people look to short that. And this bar over here, okay, had this bar here on this day where it had a nice red bar, and then the green bar came in and retraced it. Retraced almost 100%, retraced 80% of this the next day, and then the gap down here, and you say, wait a minute, that doesn't look amazingly strong, you say to yourself, because you think, well, this should have held immediately and not gap down, but it did, okay? The fact is this was not a quality bearish gap, so therefore you don't short it, okay? And you could have bought it, okay? And this wouldn't be like a bad trade to buy this because the market is, in fact, in an uptrend, okay? But again, this is why it's important to understand what is a good gap, because if you tried to short this bearish gap, you actually lost money, and I know that people did. And that's sometimes what helps these things go to crazy numbers, okay? Because people keep trying to short it and keep trying to short it and keep trying to short it. Then they finally give up on it, and then it goes poo, and it goes higher. And the people that are really buying it in the first place are holding it there and making it go. And I called this long in the room that day. Excuse me, in the live trading room. It was a good long, actually. It was a good long, okay? But a good example of momentum and power. Why is it an example of power? Why is it an example of momentum? The market held a milli out of the gate, failed in the bearish gap down, held long, held and rallied, and got bought. That is power. This market has power, and incredible, beautiful, fabulous power to the upside. This market is not going to come in. This market is not going to have a correction. This market is not extended. This market is going to continue to go higher. The next target for the QQQs is 100, and for the SPY, it's 200. And I said this back in May, and I said it back in March, and I said it all year. I said it, and I'm saying it again, and everyone else is saying it's extended. How do I know? I'm just one girl sitting here at my desk. How do I know? Because I know how to read price. And I know how to reprice in live time, and that is a skill. That is a skill. And if you take my class, you're going to learn a lot of information, and then you get the skill. And how do you get the skill? By trading. By trading, and you got to trade. And you got to trade live, and you got to do it. And you got to want to do it. And you got to have the fire and the passion inside of you that you want to do it. And I can't give you that. I can give you the conviction by telling you this. I can teach you the information. My class probably gives you passion, ignites people's passion and conviction to do it because they learn all this information that they never knew before. They learn lots of things that there's the upside down of what they thought they knew. And then they may turn their trading world around, but you got to decide that you really want it. I can help burn that within you to keep it going, but you have to be in charge of your own eternal flame. If you want to trade the market and do it, and if this is what you want to do for a career, you have to make the decision, and it cannot waver. It cannot waver, okay? Now let's talk about gaps. The golden gap. All right, here's a great example. Beautiful, beautiful gap here in CAG. This was back in June. Look at that move on that one here. Here again, the follow through continuation. Day trade worked on this day. J trade worked on this day. Swing trade worked. Beautiful. Beautiful move down in here. Big move for this thing. And let's go here to the setup. So you see here the CAG. CAG closed the night before up here at 32.80. Opened down here around 31.30-ish. Nice gap down here, $1.50. And here we have it trading down. You're waiting, waiting, waiting. You're not in it yet. You're waiting for the setup. When is it happening? Down here we have the clock. We have the time of the day. This is a 1 minute chart. Here we have the open at 9:30. And look where the stock came down here to at 10 o'clock. And then you're off. You go to the pool. You go lay out. You go golfing. Price was 31.10 for the entry. Risk was 20 cents. What does this mean? This is where you're sizing yourself from. Okay, you have to consider risk. Exits 30.50. Nice momentum move. And you got it. You got the move. It's what I call the money move. You got the whole thing. If you risk $600, you made $1,800. That's good. That's a 3R risk. So if you risked 100, what would you have made? 300. It's the amount of the risk times 3. Now, I put this here too to put the buying power. The buying power is 93,300. And we're going to talk about buying power a little bit more, but the trade was less than 30 minutes. So a lot of people ask, well, how much buying power do you need? This is not the cash for dollar. It's the buying power. This includes leverage. You would have needed that for 3,000 shares of the CAG. What's the definition of buying power? The money an investor is available to buy securities or short. In a margin account, which you would have at a broker if you wanted to day trade, the buying power is the total cash held in the brokerage account plus maximum margin available. Bottom line is, if you want to go to a broker, you're going to get margin if you want to actively day trade. And so you don't need $93,300 to do CAG. You need buying power of $93,300 to do CAG. Leverage is a great thing if you understand how to assess risk, and also if you use stops, which I do. And why do I use stops? I use stops because I know where the stop needs to be, number one. And number two, because if CAG wouldn't have worked, I know that my risk is defined. I know that I'm only going to lose $600. I don't want to lose an unlimited amount of money. Okay? I want to lose this much when they lose. I want to make, on average, this much when they go. And I know if I do that, I'm good. Okay? What happens is that many traders, why they don't have good results, they make a good trade sometimes. They make a good trade sometimes. Sometimes traders make common days, which I call anything over $1,000. But their losses far exceed their gains because they don't use stops, don't know where to put the stop, and also just can't give up on a bad trade then. They said, well, I'll give a little bit more room. I'll give a little bit more room. I'll give a little bit more of a rally. And you need to know where to cut it. And you need to know where to kill it. And you have to kill your trades sometimes. You have to accept that sometimes you're going to have a loss. That's the other thing about deciding to do this. Okay? Now, let's talk about the CAG buying power required. 93,300. Okay? That doesn't mean you needed 93,300 cash. Brokers give you leverage based on your cash balance. You use that leverage to take good risk-reward trades using stops for calculated risk. You can also ask your broker to put in a daily stop loss for you. You can even do this at retail places. You can say, Mr. Broker, I don't want to lose more than $500 today. Would you please put that in my thing? Because I need to get used to this and I have to work on my discipline. And I'm working on that with Adrienne right now. And she's trying to help me. But until I get it down, until I've solved that problem, can you put it in? And they say, yes, we'll put it in. Okay. Brokers don't want you to blow up. That doesn't help them. Okay. But I'm pointing out here that this is an idea of what you could have made if you had this much buying power. And actually, this isn't a lot of buying power, quite frankly. 100,000 will do you good to do gaps. Bobby wants me to go back to the CAG. You're not in this here. You're waiting. Let it rally back. Boom. Drops, comes down. Boom. This is the move in here. See it? From the setup. All right. Okay, let's go to the next one. Now the next day, it worked too. What do I call? I call this continuation gap, okay? Again, could have done a swing trade, could have done a core trade, nice move down in here, fell, went to a bigger target immediately. Do they always do that right away? No. Sometimes they waited it back up a little bit, but, you know, many times the gaps are so good, the momentum is so good, the power is so good, they have the follow through, and sometimes they run out of day. It's 4 o'clock, the market closes, they still have some more room in them, and then they go the next day on through. Again, nice momentum. Stock opens, here's the open. Here's the open of the day. You're not doing anything with this bar, you're waiting. Here we are down here, 1 minute chart. Here, similar, look at this, down into 10 o'clock, into the open, 9:30 to 10 o'clock, 9:30 to 10 o'clock. Could you have traded this more and got more of a move? Yes, but this enables you to have a good risk reward trade. You're in and out quickly, you're making money, okay? And you could do other stuff with your life or your day. And this should not stress you out, okay? What I find that many people have a problem with trading is that they get so stressed out. Why? Because your eyes are tired, your brain is tired. But if you sit down at 8:30, 8 o'clock, 9 o'clock, and you're in front of the computer all day till 4, and then you come to a webinar like mine at 4:30, you are mentally and physically exhausted. Your eyes are exhausted, your brain is exhausted. You need a nap. It's too much to expect that you could be perfect for 6.5 hours a day. I say, you know, this all the time. I can be perfect for half an hour. I can be perfect for an hour. To expect yourself to be perfect for 6 hours, that's a lot. Meaning I can be perfect with the perfect pick, with the perfect entry, with the perfect exit. I can do that. I can do that every day, day after day, with the focus, that super focus in a short period of time. But to expect yourself to do that in 6 hours, for 6 hours straight every day, Monday through Friday, is too much to expect of yourself. Okay. No, it was early. It was early, Bob. It was right in the first 5 minutes there, the CAG. Okay, for the first one. Is that what you're talking about? Second one here was a little bit later. Still beginning part of the day, still into the open. I only watched one thing in the open, my top pick. And I may have 2 picks. And if I have 2 picks, I'm flipping. But I usually know what I like. Price 30.09. Risk on this one is 11 cents. It's better. Could have taken more, could have loaded it up. Again, your risk should be the same. Either $100 every trade, $150 every trade, $500 every trade, $600 every trade. It should be the same within a couple different dollars. It shouldn't be much of a variation. Exit $29.75. Well, you say, well, that's not that much of a move. It's only, 30-some cents, but it's money. It's real money. The risk to reward is 3 to 1. And you're done. And you're done very quickly. Now, you need a little bit more buying power with this one because you sized it up. 165. But the trade was done in less than 20 minutes, and you just take whatever you can afford, basically. Now, let's pretend you're like this guy here. You're a beginner. You're just starting out. You never traded gas before in your life, but you really want to do it. The fire is in this guy. Look at him. He's up. 5 a.m. He's up and ready to go. He's studying his gaps. He's going over his charts. He's getting situated. He's having his coffee. He's having his breakfast. He can't wait for the market to open at 9:30. He quits early. He's done by 10:15, and then he takes a nap. But he gets up every day, ready to go. Now, he did this trade here on day 2. He does not have $165,000 in buying power, and he does not have $600 to risk right now. He's a very small account. He's just starting out. He's a beginner. That's fine. He can do the same exact trade. He does the exact same trade. He gets in the exact same trade, and he sizes himself correctly because he has a calculator next to him, and he's good with numbers. And he's been practicing. He took 1,100 shares of this. He risked $110. He made $374. $374 is $374. $400 a day times 5 is $2,000 a week. $2,000 a week times 4 weeks in a month is $8,000 a month. $8,000 a month times 12, you do the math. And by the way, if you are good, okay, you will make faster leaps, meaning you won't necessarily be trading this size for a year. You might realize that you're getting it, and then in 3 months you up it. So, but even still, it's the point that you don't really have to risk $1 million to get the same risk to reward. It's about sizing yourself correctly according to what you can afford. Otherwise, you throw yourself into the fear mentality, the fear mode, and then you don't make the right decisions based on the money, and you don't make right decisions at all, and you stress yourself out. And stress is bad for the brain. It's bad for your body. It's bad for your physical health. And you age when you're stressed out too much. Okay? The reason that people have this flame inside of them for passion, they want to trade, is because it's there and nothing affects them. What happens is many people, they go to a place or they start to trade and they know nothing. They don't take a class. They say, I'm doing this. I'm watching this TV show and I like this pick and I'm just going to open up an account. I'm going to trade. And then they go and they do it and they lose. Guess what happens to the flame that they had? The flame they had inside of them, the passion they had for the market, it dies. It dies because they lose then. And they lose too much then at the beginning. And then the passion's gone. And then what do? So don't let that happen to you. You got to keep that burning passion alive in yourself. Don't risk more than you can afford to lose in a trade. Now, the buying power in this one is good. Only $33,000. That's all you need for buying power to do this one here. And it could have made $374. That's really good. Time of the trade, same thing, 20 minutes. So I was talking about this earlier, but third quarter earnings season is right now in July and August, and it's a really good time to trade Golden Gaps. It's a good time. Again, just reviewing here, trading Golden Gaps is a lifestyle choice because you're going to trade in the morning. You're going to trade in the open. You're going to be done quickly, then you're going to get on with your day or do something else. Okay, what do? Well, I usually stop trading, then I go to the gym, come back, have lunch, do a webinar, or go out in New York, walk around the city, go shopping. I do different things. Sometimes I don't even know what I'm doing on a day. Do you have any idea how great it is to get up, trade when you're done trading, decide what you want to do then at 11 o'clock? Do you have any idea how great that is? Do you know how many years I did mortgages, that I worked until 10, 11 o'clock at night, that I worked every day, 7 days a week, that I never had even free time to actually think what I want to do today? I never had a choice. I never had a chance. I had to keep working every day. When somebody called me, a realtor, a client, anyone needed me, I had to be there. Now I can leave the house at 11 o'clock if I want. I don't have to come back till midnight or later. I can do whatever I want. I can't tell you how great that is to do it and to feel that kind of freedom in the summer. Because in the summer, the weather's nice. And if you live on the East Coast, you got to get out. You got to enjoy the weather before the winter comes. And if you have choice, the lifestyle choice to be able to do that, it changes your outlook on things. It changes your interpersonal relationships because you're happier. You're happier with your life. You're happier with yourself. You're happier than when you talk to people. You're going to attract better people into your life, okay? So think about what I said today and ask yourself if you're getting anywhere with your trading because half the year is over. It's crazy, but it's true. It's less than 6 months to Christmas. I know it's really nuts. But the fact is that if you're not getting somewhere with your trading yet this year, half the year 2014 is over. And you got to seriously sit down and consider some of these things and maybe have a consultation with Adrienne about it. Have a consultation with her and, say, I don't know what I'm doing here. What should I do? Should I do something else? Should I quit? Should I stick with it? Do I have the passion? Your time is valuable. Whether you're meant to trade or not, your time is valuable, that you're alive on this earth and you want to be happy and you want to make every moment count. And that means not being stressed the hell out, miserable, upset, depressed. You want to be in joy. Enjoy with the people that you interact with, and you want to be enjoy what you do for a living. And if you're doing a job that you don't like, look at it as a stepping stone or a vehicle to get you where you want to be with trading. Because if trading is what you want to do, and you can't quit your day job right now till you're making money trading to support yourself, then be happy in the moment, in the job you're in, and look forward to the time when you can do this stuff trading and start to do it. Start to take the class, trade in a demo, learn the information. Every second you could be doing something to move forward. Okay, doesn't mean you have to run out tomorrow with $600 a trade, all right? You have to do things and start to take steps to move forward, like the beginner trader, because time keeps ticking. And like I said, half the year is through, and you got to think about your goals. And are you on track to meet your goals? So the Golden Gap class is a strategy that has consistently fast setups, and I teach the class. It's called the Golden Gap System. It's a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using the checklist. And that's what I do. So you would get up each morning, you rate your gap, and then you know what to play. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. Out of thousands of stocks, you need to know which one to watch, and you only need one. The course also teaches you how to play the stock as a day trade, and the course teaches you chart analysis and technical analysis on an advanced level. Long-term trade potential is there also for swing and core trades and highly rated gaps. So for people that really can't trade at all during the day because they are at a job that they can't get on their computer, are times when they can't do it, you can learn how to rate gaps. You rate the gap. You could take the trade then for a swing trade or a core trade. In other words, if you can't be there to trade, to get in and out into that open period, you could do it for longer term. And it is a very high success ratio. However, your risk is different because your stops are going to be different and you're not cashing out as quickly, and you need to be okay then in a position longer term till you would make the profit or take it off. If you want to make money trading, then you need to learn a strategy that pays you. And that's the point I'm trying to make. So sit down and evaluate it. Maybe have a consultation with Adrian about this to get yourself where you need to be to still achieve your goal this year, whatever your goals were for this year financially. The Golden Gap class is a complete system to use to trade. There's all the pieces of the puzzle together there for you to learn how to trade. A full 2-day course on how to strategically find, pick, and play stocks at a professional bearish gaps. The class is online. Retakes are free. So you can take the class one time, you sign up, you register, you can retake it as many times as you need to. I find that people often do this, although you don't have to. It's up to you. If you want to learn it and do it, trade small size, come back before you increase your risk. You can redo the class, okay? You can always call and ask me questions. So the class is not this weekend, but next weekend, July 26th and 27th from 9 a.m. to 5 p.m. Eastern Time. It is a professional bearish gap system. The cost of the class is $29.99. If anyone's interested, you can email me at melissa@thestockswoosh.com for more information. I'm also offering a special for this July class. All new students of the Golden Gap course in July receive the Wealth Manifestation course for free. This is a great class, actually, where I don't talk anything to do at all with stocks or charts. I'm talking about how to get your mind focused and in the right direction. It's a trading psychology class, actually, and I find a lot of people need this because they have to have their head on right about money in order to make money in the market, particularly if you started out down the wrong path when you first started out, like I was talking about earlier. This helps to get you honed in, focused in the right direction. So I'm giving this class for free with anyone that does the GAP class this month. The date of this class is July 31st from 12 to 3, and if you want to do this class separate, it's $3.99. So email me at melissa@thestockswoosh.com for more information. I also teach another class on trends. I'm offering half off that class with the GAP class this month too, and that is July 29th and 30th. So you would actually save $500 if you did all 3 classes together. And if you're interested in this, email me too. I have a testimonial here. I'll let this up, and you can read it, and let me look and see if I answered all the questions. Bobby had a question. Bobby was talking about the CAG. I think I answered everybody's. Let me just scroll up. I think that was it. And for those of you that were asking about eBay, I will definitely do a video tonight on YouTube about eBay, just to tell you really the quality of that. Thanks, Phil. Dinner's on the table. Have a wonderful night, everyone. I look forward to seeing all of you soon. If you're interested in more information, email me at melissa@thestockswoosh.com. And thank you so much, Adrian, and your staff, Wendy, for having me at this presentation day. Thank you so much. And again, think about what I said about maybe having a consultation with Adrian, maybe if you're thinking about what is my right direction. Okay? All right, great, everybody. Have a nice night.